Low risk versus high risk businesses in UAE banking. In UAE banking, risk is not emotional. It is not personal. It is not based on how confident you sound or how ambitious your plans are. Risk is procedural. It is calculated. It is documented. It is applied instantly. And it is applied constantly, whether founders like it or not. Many business owners believe banks judge them based on success potential. That is not true. Banks judge businesses based on how easily they can be monitored, explained, and defended in front of regulators. The simpler your business looks on paper, the safer it feels to the bank. Low risk businesses in the UAE share very specific characteristics. They are predictable, they are traceable, they are stable. Their revenue models are easy to understand. Their transactions follow patterns. Their clients are identifiable. Their operations are not spread across multiple jurisdictions without any explanation. This is why IT services are considered low risk. An IT services company usually has defined contracts, clear deliverables, and identified clients. Payments are structured, invoices match services. Cash flow follows logic. Facility management is another example. It involves local clients, recurring contracts, and physical operation. Banks understand it easily. There are no surprises. The flow of money makes sense. Local trading businesses also fall into the low risk category. Goods are purchased, goods are sold, margins are visible, and transactions are straightforward. Bank can trace inventory, suppliers, and customers without complexity. B2B consulting with signed contract is also seen as low risk. The key factor here is documentation. Contracts explain the services, invoices support revenue, payments align with agreements. Everything is explainable. Now compare this to high risk business. High risk does not mean illegal. High risk means complex. High risk means international. It also means difficult to monitor. Crypto related businesses are high risk because money moves quickly, often across borders, sometimes anonymously, and under evolving regulations. Even indirect exposure raises concerns. Forex and trading businesses are considered risky because of volatility, speculative behavior, and regulatory sensitivity. Banks see these are unpredictable. Fintech platforms and payment-related businesses face scrutiny because they handle other people's money. This creates liability. Chargebacks, refunds, and disputes increase risk exposure for banks. Influencer marketing agencies are often flagged because income is tied to platforms, promotions, and foreign brands. Revenue streams are fragmented and difficult to trace. Dropshipping businesses without inventory raise questions. No stock, no warehouse, no physical trail. Banks struggle to understand how products move and how value is created. Offshore service models are also high risk. When clients, payments, and operations are spread across multiple countries, banks must deal with multiple regulatory environments at once. To understand how banks decide, you must understand the four main factors they analyze. First is source of funds. Where exactly does the money come from? Not generally, specifically. Second is destination of funds. Where does the money go after it enters the account? Third is client geography. Are your clients local or international? Are they in regulated jurisdictions? Fourth is transaction behavior. How often does money move? In what amounts? In what patterns? A business can be approved or rejected based purely on how these four factors are presented. This is why two identical businesses can receive completely different outcomes. One is positioned clearly, the other is vague. The other is not clear. Risk is not what you do. Risk is how easily a bank can explain your business to a regulator. If your business story is simple, consistent, and documented, banks feel safe. If your story requires long explanations, assumptions, or expectations, banks step back. In UAE banking, clarity reduces risks. Simplicity creates approval, and complexity, even when legal, creates resistance. Understanding this difference changes how you structure, position, and present your business from day one.